Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, March the 20th, 2023. Well, the long wait till Wednesday has now officially begun. We continue to see a lot of volatility in the market, even though the VIX did end up dropping today. Intraday volatility has increased dramatically. If any of you are trading First Republic options, that volatility that expires this week was at 725%, which I think outdoes anything that I saw during the AMC and the GameStop days way back when. I mean, the volatility is just nuts. I think the markets and their interminable push higher, it just seems a little bit misguided because, again, it was not difficult to see where it was going, and they had reversed Microsoft. It did make a recovery into the last hour into the close, but they pushed Apple first down lower, then they held it up, and then they wouldn't sell it. So that to me is like a little touch of manipulation. AMAT being pushed higher, Honeywell being pushed dramatically higher, both a member of the S&P and a member of the NASDAQ. So, we got a lot going on. And then we had Meta initially down, then being pushed pretty much solid into the plus column. Netflix, again, NVIDIA, both were lower, getting pushed higher, even Tesla. So it seems to be becoming more commonplace where they just will do what they want to do, and they know exactly which stocks to kind of go after and make sure that this all happens. That's what it appears. I'm not very big on conspiracy theories or anything of that nature. I do know there's still a lot of conversation about what the Fed's going to do on Wednesday. And I think it's going back to 25 basis points, or maybe just give a pass on this particular one, leave them unchanged on this particular one. I don't know. So to me, I think there's still this broad misunderstanding of how and what the Fed has set up to deal with these potential crises, and that lowering interest rates really doesn't come into that equation. So I'm looking at that as good. We could get a really good surprise on Wednesday, should they decide to do more in line with what their expectations are. So we saw the bond market come off a little bit today as they start to kind of reconfigure exactly where they think everything should be interest rate wise, particularly in the June and September Fed funds future. The 2-year note came off a little bit. This is after rallying pretty strongly overnight, getting itself back in the 2-year note, getting itself back above 104, et cetera, et cetera. So all in all, it basically was a day where I thought, this is getting interesting, because in the S&P, they actually did cause me to put in an adjustment to the count. I had been marking this high as the completion point for that minute wave 2, start of a minute 3. It all looked great until it got there, and then they pushed it back to there. That's too high. That leaves this as a 3. So now what do we get? A, B, C, X, A, B, C. So here's the picture for now. I think we can get a little bit of a B wave, unless we've already seen the B wave. That would have been right here, but I'm not going to consider that. I think that if I have to go from here, which should be about there, let's just take a look. Let's just see what the fibs on a retracement basis would look like for a B wave. So I'm going to open that up like that. Put this down there, bring that back up. Now we got it all. So again, normally with a B wave, you get 382, 50, 618. And there's the 618 all the way down to 39.31. But they're not really willing to give up this upside. Again, in the zero DTE options today, we saw via the S&P 4,000, 405, 410, 15, 420, 4,020. Lock solid with liquidity, stops, sell orders, everything, all sitting there waiting. But in the SPX, the calls, the 3950 calls were the magnet. They had the highest open interest going out today. So they had a high, good open interest move coming in as we started our day. And then they traded over 60,000 contracts today. And that's exactly where we got in terms of a close. That close was 3951.57. And then the that was in the cash, and then the futures market ended up finishing up at 3987.50. So again, still a little bit higher on the premium side for the June contract versus the cash, but that kind of is with the opinion that the cash will open higher tomorrow morning. Now, again, looking at what we got going on, if this is an X wave, we're going to do 5 up. We come off in a B wave, 39.53. We were there once today. Hit it on the nose, as a matter of fact. And that would have been at noon. We get down to 39.54. If we come back down there, that would make a nice little B wave. If we get it down in 3. So once again, this could be A, B, and we come back down and we got a nice 3-wave flat. Now, this could happen overnight. And that sets our stage for to put in the next leg up. So where do we start looking here in this market, right? I'll go over and take a peek at the SPX for tomorrow and see where that's kind of lining up. But here in the futures market, we have 4,006. We have 39.89, 39.90. That continues to be kind of a magnet type of an area up to 39.95. So you have 39.90 to 39.95, which could be stacked up with orders. And then we have 4,000 to 4,006. On an options basis, we have 4,000, 4,005, 4,010, 15, 20, and 25. So in between there's a lot that's going to be offered. Whether that all expires today and they got to re-enter, I don't know. We'll find out more about that in the morning once we can get some good readings from Bookmap. But we can take a look here to realize that we've got between these two resistance points, we're going to have a lot of additional resistance. Above 40.25, we get a little bit slight black hole. And it could be a very quick run to 40.55 or 40.50 to 40.70. Again, not really looking for something above this, but we got to say, could it go there? It could. It could go there. I'm not particularly looking for that level because we run the risk of dropping it above 40. Well, actually, it would be 42. And then here, let me open up this guy. Oh, I got way too many 2s there now, don't I? We're going to have that one there, and I'm going to have to get rid of that one. I don't need that. Hold on. That guy. So this 2 is 41.26. So it could get to 41.09, but I don't want to see it going above 41.26. Actually, it's going to be a little bit lower, 41.24. Then I'd have to back it all the way up to see what was all this. So a lot going on. This is a pretty clean 5, so I'm going to leave that as a minute first wave. If anything, we got an A, a B, and a C. And instead of this, I got another X wave. So there could be just a lot of fireworks left. and for this market to do a lot of really crazy things and still leave us out there in the lurch as to what the little bit longer term is presenting to us and what does it all mean. So bearing that in mind, so just kind of going over what the market could be looked at as accomplishing here. So first I'm going to take the B wave off. We did remember it's going to be like right there, 39.53 down to, or 54 down to 39.45. Those would be two levels. That would be nice. Get a little B wave going, bring it down to there, and then we get a C wave up and maybe bring it back up to here. We'll see. But if it exceeds, and I've got to go change this around in terms of this being 1, and then we have an ABC A, and then we have a B, and then we're in a C, which is actually could, in its own right, be forming a triangle. 1, 2, 3, 4, 5. If, but right now, kind of the diagonal part of it gone. So that's why I'm going to leave it right now as an ABCX and a double ABC for wave 2. If I'm counting it as a C wave, I can't. This is not right. But then again, the market has been so bizarre that I'm just going to have to let it play out and then determine what and how this is all going to be labeled. Bottom line here remains that I believe that once this is done, the equity market should be taking a nasty tumble. Now, one thing that I did notice yesterday, and I may have included it on my update last night, I'm not sure, and that is that the 2-year note appears to have completed its intermediate A wave at like the March 6th lows or the March 8th lows. I'll quickly just show you before I go over to the NASDAQ, because this, I think, could have a strong play. If I'm moving this from, it was here, and this would have been a little bit of a bizarre B wave, but this launching the way it did, getting up to above 104 as it did overnight, threw a lot of things into jeopardy. So this much cleaner, 1, 2, 3, 4, 5. So I got the 5 and then thought, oh, well, if I just move that 4 and put it over here, it makes it cleaner than that 5. So that's what I've done. And then that suggests that what we're going through here is an intermediate B wave, again, 2-year note. So, but what above all of this does it also begin to suggest that the yield curve will begin to flatten? And how is that going to be achieved? That we get the short end of the curve, the 2-year note, treasuries underneath, the T-bills, the rates begin to soften. So we see the rates go down, the prices of the Fed funds, of the 2-year note, of T-bills goes up. The price of the bill goes up, the yield goes down. As this intermediate B wave plays out against the 30-year, the 10-year note, and the 5-year note, likely picking up the decline again. We're going to get that yield curve to flatten out a little bit. I'm not saying it's going to go totally flat and then invert in favor of the long-term interest. So that's in that bond. Back over to the S&Ps. They're tossing that in there. There's all kinds of narratives and talk going on, and it's not real easy to try to go, well, we got a lot of pundits and they got a lot to talk about and they got a lot to say. So again, looking on a 4-hour chart, it does seem that we still are going to do an A, get a B wave in, bring it back down to 39.45, put a B under there, right? A sub-minute, right? These are sub-minute. This is minute. So sub-minute, ABC, X, and doing another A, B, and a C. We end up 40.25, maybe as high as 40.55 to 40.70. That all fits. And then we put the 2 and we roll. All of this can happen by Wednesday. There's going to be a lot of energy wound up pretty tight going into Jerome Powell stepping to the mic. We'll get the decision prior. And there will be and undoubtedly to me, there will be a reaction one way or the other. There's going to be a reaction to exactly what the action is telling us. Either a quarter point or 25 basis points or 50 basis point hike or no hike to quantitative easing. I don't see quantitative easing. I think that's shooting yourself in the foot and then having the bullet go through the floor and kill somebody else. That's what I think about that. But hey, been around for a long time, not always been correct. So, but I do believe no matter what happens, or no matter what that Fed decision is, we should have a pretty strong reaction because both sides of the coin are wound up very tightly. So we have a lot of energy that's going to be released on Wednesday at 2 p.m. Eastern. And then again at 2:30 Eastern when Mr. Powell steps up to the mic. So for tomorrow, if this is indeed going to play out as I'm seeing it play out, we should get the completion of the A wave, which may have happened today, a B wave, which could be from here, maybe a 20 to 30 point drop. And then we get the C wave, which will come in 5 waves in and of itself. This, I believe, if I took it down far enough, you're going to see the 5 waves in here as well. It wasn't super easy. And I will say that. Trading had its moments, but you know what? Most of them happened early. See, if I look here, 1, 2, 3, 4, 5. So if I can put an A there, we get a B wave in, I'm going to be looking for a C wave up. And in that case, this 38.97 up to 39.89. So let's just say 39.90 just for the sake of the argument. And what was this again? 38.60 something? 38.97. So that's going to be 38.97. We'll put it there. So it's 93 points. So if it comes down to 39.45, which would be nice, that's where I'm going to just take it. 39.45. We've got 40.38 right in between. So 40.25 still in the picture. A perfect little ABC, all nicely laid out. Fibonacci wise, could reach up above to here and into this level. So these become alive. These very much are alive, all the way up to 40.40. Very, very much alive. So I'm sure there will be a lot of speculation in the 40.50 call. And we know at the 40.65, I think it is, there's still that JP Morgan collar. And so a lot of things come into play up in these levels. We shall see. Moving average-wise, pretty much the only thing we got moving today are the 4, the 8, and the 20, and the 50s, and the 200s are pretty flat. 50's got a very slight angle to it, but nothing really to write home about. Over in the NASDAQ, strange, right? I'm still looking to just get up to a completion of a minute C wave to complete minor 2. Again, over in the S&P, we now still back in that play where we're starting to finish the minute wave 2. So different degrees, same type of a move. And here we have in the C wave 1, 2, 3, 4. Because before I was thinking, okay, we had this, but I was like, well, that's not really going to come off. This could be very strange. It continues to be strange. because unless we really can start breaking this resistance and get ourselves back above 12,750, and then again above 12,800, there is a very strange but outside possibility that this 3 will come back here and the 4 will be put here and the 5 will be there, and we're doing a whole bunch of 1-2s. A whole bunch of 1-2s. What'll knock that out of the water is a cross above 12,755. That'll kill all of this and leave this as 3, 4, and we're moving up in the 5. So where's our resistance? Same place, still in the same place right here, but I will just put in these fibs. And again, what we're looking at is the 3rd. So we're going to go from wave 2 because we're looking at the 5th. Its closest relative is going to be the 3rd. And if this is where I'm putting my 4, I'll stick it right there. Where can it come in? Well, you got up here, 12,900. But here we have 382, 1.618. Also good zone, good zone. The 618 for us doesn't come till 13,000. I'd be like, oh, I don't want to see it push all the way up to there, but it could. Again, depends on what they do on Wednesday. They could push after we get the news on Wednesday, give it one big wow, and just get right there. So again, if we start exceeding these upside targets, it is going to revert the bigger picture into something else. And I will figure it out. But I need the market to make clear exactly what that's going to be. And that's where I always place my trust, is that the market's going to tell me versus me trying to tell the market. We know how that does not work. So let's be prepared. Again, the trading was not as easy. You made your money in the first hour, hour and a half this morning, and the balance was kind of herky-jerky and eventually showing a lot of upside potential, but sometimes you just had to sit and hold on to something that maybe you didn't want to, but it all worked out in the end. There was a lot of just flipping it around and going nowhere in between getting somewhere. So same thing here with our moving averages. Although the 50 is pointing higher, the 200 EMA is pointing higher, the SMA angling up, not really getting too excited there. The 20, the 4, and the 8 all reacting to all the moves. So all in all, we still sit within our box awaiting the news. Slight change on the labeling for the S&P. Nothing really new to report in the NASDAQ other than the internal little subminute wave 4 likely complete. We're likely within subminute wave 5. Although I have to say, ABC A of 4, ABC B of 4. We come back down and end up here, put the 4 over there, then rally. A lot going on. Or, we've got 1, 2, 1, 2. Boy, that would be bizarre. Coming off. So in other words, the 4 would go way up here, like here, and then that's the 3 would go here. The 4 would show up here, and the 5 would be here, and we'd still put that 2 up here. And what we do coming off, excuse me for the yawning, I apologize. My eyes are pretty tired though. So we got 1, 2, 1, 2. So again, we finish a 2, minor 1, minor 2. And so in that respect, these would have to be done. And this again would be subminute wave 1. So it's breaking down. I'm not really liking it. So I'm going to stick with this, and then we're going to go up and finish it up here and then get a nice clean rejection. So, and I know there's a lot of people and they're commenting and they're letting me know that's like, oh, that, no, it's going to go here. It's going to go here. And it's like, I'm not betting anything of where this thing is going to end up on Tuesday or Wednesday. And then what it's going to do after the Fed tells what some people are convinced will be QE, or at least giving an interest rate hike pass. for the month of March. Have to think about, if they do, why would you think the world's going to perceive that as a positive? Well, that's what they've done in the past. It doesn't mean that's not going to do what they're going to do in the future. Central banks have already demonstrated, being that our biggest ally in terms of central banks is the European Central Bank. And they didn't hesitate. They did not hesitate to raise the European Central Bank rate 50 basis points last week. But everyone's thinking that the Fed's got to have to give a pause. They have to give a pause. It's like, I don't know if they have to. It's out there on the table. Don't know if they're going to take it. And again, I just want to reaffirm that the Fed, the FDIC, and the Treasury Department all have gotten together. They're the ones that form the plunge protection team. And now they have a new name, by the way. So they're real. This is something real that does exist. And they all meet and determine how we're going to go about all of this. So on this whole thing with First Republic, Jamie Dimon is the one that headed that, and he's the CEO chairman of J.P. Morgan. So you got J.P. Morgan, Goldman Sachs, Wells Fargo, Bank of America, Bank New York Mellon, U.S. Bank, and there's somebody else out there that was included in that, and they all chipped in maybe $6 billion each or whatever to provide $30 billion to First Republic. So in what is going to end up being one big shell game. Flipping around, look for where the deposits, Nope, they're not under there. Nope, flip. And if you ever watch the shell game, they move pretty fast. So anyway, I'm going to kind of leave it all right there. We did a little bit of an update on the bond market. They're kind of sitting around. They're not really moving very strongly. It was up, it was down, it was all around. But the 2-year note closed slightly lower after putting in a fairly decent rally. Still looks like that is also just going to be putting in a B wave, which gives it plenty of room where it could come off from this current level and still rally back up in a C wave. We're looking for the other bond markets to finish their intermediate C wave and then set the stage for finish their minor C wave to complete the intermediate B wave. And then flying off in a big 5 waves, intermediate degree decline in bond prices, a rise in the bond yields. All right, going to leave it right there. Our next update will be on Tuesday, March the 21st.